Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today's Wednesday, the 25th of July, 2007. The market closed, and we had a pretty volatile session here today. But the market did hold above this trend line I pointed out yesterday, and we slightly undercut that that prior low right here, but did find some support intraday at the at the trend line. And today you saw again we had very heavy volume. Now we finished with a slight gain in the spiders. That's one thing I don't like about candlesticks is it shows red, but basically we were up on the day 39 cents. It's a 1/4%, and the volatility came with big volume, and big volume and volatility typically come near turning points. So we've just got to be, I think, continue to be cautious in here. We've got to look at the market. You have to look at the market and figure out what time frame you're trading on. If you're trading, for day trades, then you want to focus on the 1 minute time frame. And we had some great sell-offs and rallies in here today. This rally came basically when it broke the downtrend line from the day for the day and got back above that daily VWAP right there. And the VWAP, as some people have asked me, what is that? It's the volume-weighted average price. If you want more explanation, then Google that on type VWAP into Google, and you can find more information there. The declining 5-day moving average does tell me that the intermediate term we still want to be cautious on this market overall, but the volatility may be coming at a turning point. It's too early to tell. Basically, this market we have to continue to I think just treat it cautiously. And if you're a more of a swing trader or a longer-term investor, then maybe sidelines or cash is the best place for you to be right now. Intraday, things turn real quickly. I tried to give a couple updates on the Qs today, but they were really just too volatile in there to keep track of without posting every 5 or 10 minutes. The IWM, yesterday I said that I think a lot of people were looking for this 80.5 level to hold as support. And it came down to there yesterday. I said, though, that a lot of times that obvious level of support doesn't really hold, that you got to take a little bit lower, down perhaps to the 200-day moving average. And that's exactly where it fell down to today. So I think the fact that we're at an area of pretty good support for the IWM, and we found that 200-day moving average intraday acted as support, that the worst might be behind this market, at least for the short term. It doesn't mean I'm expecting a big rally, but I think a rally back up towards these moving averages over the next week or so would not be unrealistic to see, and that we're probably due for a bounce. However, I don't think it's the time to purchase yet because we've still got this declining 5-day moving average. If you're going to be a purchaser, you got to play it on the shorter term time frames, the 2 minute, the 1 minute time frame. And again, you can see that late in the day that daily VWAP was recaptured and the market closed right around it. The market's going to be able to continue to be volatile here, obviously, because we have earnings. And today, of course, we're going to have earnings from Apple due here in a moment that should put some impact on the market. So, we're in the middle of earnings season. We've got kind of a trendless market overall as of the last couple of days. I think it's turned pretty neutral, and that means just go slow in here. That's really to me the realistic way to look at it. There's going to be great intraday opportunities, and those are going to be up to your trading skill whether you find them or not. The semiconductors, we saw that the prior level of resistance right around that 38.90 level was tested yesterday and seems to be holding, at least for now. The direction of the 10, 20, and 50-day moving averages are all higher. So we still got a good uptrend on the daily time frame. However, when we look at the intermediate term here, we've got the 30-minute time frame. We saw that trend line break, and we still got a declining 5-day moving average in here. So still, I don't think it's time to purchase in here until we can see this market recover and get back above that, and the direction of it continues to turn higher. The Nasdaq 100, we saw the neckline tested early on this morning at $49.70. Was the intraday high there, at least on the pre-market, maybe about 68 cents for the Qs. For some reason that wasn't updated all the way. About 68 cents or so for the Qs on the regular session, that is. And I was thinking earlier on that maybe this level in here was going to be a good area for the purchase. Actually, it was on the intraday time frame. I said right in here. that I thought maybe a purchase near that 40-cent level would make sense. And then over here, I'd gotten short through the QID. So on an intraday basis, you had opportunities for the long and short side. And when this downtrend line was broken, and it retook the daily VWAP, that's where the volatility came in. That's your short-term trend. Your intermediate-term trend still needs to get back above 49.60, 49.70. I think getting back above there, then these sellers are trapped in here. And you've got to remember that on a daily time frame, we're still in a very nice, healthy uptrend in here. This prior level of resistance looks like it's acting as support right along the rising 20-day moving average, which is often an area of support in an uptrend. So again, mixed signals, but in the Qs, I think you give the benefit of the doubt to the buyers. And overall, just take it, be careful in there.